Environmental, Social and Governance, ESG. It's a green world after all. Leaders around the world are in a green race to meet environmental goals set out in the Paris Agreement and the United Nations Sustainable Development Goals, SDGs. The Paris Agreement commits the US to a net zero emissions target for 2050. In Europe, the EU Commission adopted the ambitious European Green Deal Action Plan in December 2019, with medium and long-term sustainability-related goals for all sectors of its economy: energy, buildings, industry, mobility, and agriculture. The plan also laid out financing mechanisms and a roadmap of legislative and non-legislative proposals. Chinese President Xi Jinping pledged at the UN General Assembly last year that China will achieve peak carbon emissions before 2030 and carbon neutrality by 2060. China's 14th five-year plan also featured environmental protection as a key agenda, as well as the dual circulation policy, which focused on energy security. For many investors, concerns remain regarding lack of consistency in ESG definitions, standards and benchmarks, limited availability of green investments in fixed income, and concerns over greenwashing. Bottom line: the COVID-19 pandemic and the ensuing shock to economies and societies has cast the spotlight on the urgency to address risks in climate change, social integration, and governance issues. We witness renewed urgency by governments, regulators, asset owners, and individual investors to re-evaluate the value of sustainable investing as a means to strengthen long-term portfolios. Companies capable of broadening their agenda from maximizing shareholder value to engaging with customers, employees, and society, contributing to the climate change agenda and aligning to ESG principles, will likely attract valuation premiums over time. We believe sustainable investing will become mainstream and ESG factors will become ubiquitous means of assessing risk-reward for investments. With the weight of national and multilateral policies behind the ESG agenda and the liquidity of capital markets directed at ESG investments, it is timely for investors to adjust portfolios to align profitability with a purpose.